Hello and welcome to another video here on StratCab. Today we are going to take a closer look at a company that keeps appearing in discussions about artificial intelligence and data platforms. And that company is Palantir. Very few software companies are currently associated with the AI boom as strongly as Palantir. At the same time, the stock has seen an extraordinary rise over the last few years, which naturally raises an important question. Is Palantir truly one of the most important AI platforms of the future, or is a large part of those expectations already reflected in the current stock price? That is exactly what we are going to analyze step by step in this video. But before we begin, a quick disclaimer. This video is for informational purposes only and does not constitute financial or investment advice. Let's start with a quick overview of some key metrics. Palantir currently has a market capitalization of around $63 billion. The company's most recent annual revenue came in at $2.87 billion. Operating margins are currently around 25%, which is already quite strong for a software company. And the company now works with more than 500 customers worldwide. These numbers highlight two important things. First, the company is still growing. And second, the valuation has become extremely high, especially when compared to current revenue levels. So the key question is not just whether Palantir is growing, but how sustainable that growth actually is. To understand the growth story, we first need to look at the business model. At its core, Palantir operates a software platform ecosystem built around three major products: Gotham, Foundry, and AIP. Gotham is historically the platform that helped Palantir establish itself within government organizations. It is widely used for intelligence analysis, defense applications, and national security operations. Foundry is the company's platform for the commercial sector. Its purpose is to integrate large amounts of enterprise data, structure that data, and make it usable for operational decision-making. And then there is AIP, the artificial intelligence platform. This platform has become especially important in the current AI cycle because it connects modern AI models directly with enterprise data and real-world workflows. The key idea here is that Palantir does not simply sell individual software tools. Instead, it aims to become a core operational platform inside organizations. That approach often leads to long-term contracts, strong customer retention, and a highly scalable business model. One particularly interesting metric is revenue per customer, because strong growth can come from two different sources, either by acquiring new customers or by increasing the spending of existing customers over time. And in Palantir's case, both seem to be happening. In 2021, the average revenue from a major customer relationship was around $9 million. In 2022, it increased to roughly $10 million. In 2023, it reached around $11 million. And most recently, it has grown to over $13 million per customer. That represents approximately 44% growth since 2021. This is important because it shows that Palantir is not only acquiring new clients, but also deepening existing relationships. In other words, once a customer starts using the platform, there is a high probability that additional workflows, data sources, and operational processes will eventually be integrated, and that leads to larger contracts and higher revenue per customer. At the same time, the total customer base is growing rapidly. In 2021, Palantir worked with roughly 169 customers. Today, the company has over 500 active customers worldwide. That represents growth of well over 200% since 2021. This is a significant shift because historically, Palantir was known for having a relatively small number of very large customers. Now, the company is expanding into a much broader market. Its platform is being deployed across a much larger number of organizations. And especially the commercial segment has accelerated significantly in recent years. That is important because the commercial market has far greater long-term scalability compared to purely government-based contracts. We can also see a strong trend when looking at overall revenue growth. In 2021, Palantir generated around $1.54 billion in revenue. And most recently, as mentioned earlier, revenue has reached $2.87 billion. That means revenue has grown by approximately 86% since 2021. What makes this particularly interesting is that Palantir is not only growing, it has also begun combining growth with profitability. Since 2023, the company has been GAAP profitable. That is a significant milestone. Many high-growth software companies manage to increase revenue quickly, but struggle to build sustainable profitability. Palantir appears to be entering a phase where growth and profitability exist at the same time. But when discussing Palantir, the operational performance is only part of the story. Equally interesting is how the market has translated this story into the stock price. So let's briefly take a look at the long-term chart. The long-term price chart illustrates how the market's perception of Palantir has changed. For quite some time, the stock moved in a volatile but relatively directionless pattern. The company was seen as an interesting data analytics firm, but not necessarily as one of the central winners of the AI cycle. Then the narrative changed. With the rise of generative AI, companies that connect data, models, and operational decision-making suddenly became much more attractive to investors. And that is exactly where Palantir started to be viewed differently. The company was no longer seen simply as a software vendor. Instead, it began to be perceived as a potential AI platform for governments and enterprises. That shift in perception drove the stock significantly higher. But the chart also shows something else. When a company becomes associated with a major technological trend, expectations rise very quickly, and that means the stock price becomes extremely sensitive to future expectations, which is why Palantir today is not only a growth story, it is also a high expectation stock. One major reason why the market is willing to assign such high expectations to Palantir is the profitability profile of the business. The company's gross margin is around 80%. That is typical for highly scalable software models, where additional customers create very little additional cost. Operating margins are around 25%, and the free cash flow margin is roughly 30%. These numbers combined indicate that Palantir has a business model that can scale very efficiently. If the company continues to add customers, and if existing customers continue expanding their usage, profits could potentially grow even faster than revenue. And that is one of the key reasons the market is willing to assign such a premium valuation. The most important growth driver right now is clearly AIP, the artificial intelligence platform. AIP connects enterprise data with modern AI models and operational decision systems. The idea is relatively simple. Companies should not just receive an isolated AI tool. Instead, they should get a system that connects real data, natural language interaction, AI models, and operational decisions. In practical terms, the process works like this. Data is first integrated and prepared. AI models are then applied to that data, and the result is a set of insights, decisions, or even automated actions. This is exactly why AIP is currently receiving so much attention. Many companies want to use artificial intelligence not just as a novelty, but as a real operational tool inside their business. And if Palantir manages to establish itself as a central platform for that transformation, AIP could become the most important commercial growth driver for the company. Of course, there are also risks. The first major risk is valuation. When a company trades at very high multiples, there is little room for disappointment. Even a slight slowdown in growth can trigger significant stock price reactions. The second risk is contract concentration. Although Palantir has diversified its customer base, a portion of revenue still depends on large government contracts and major enterprise customers. If those projects are delayed, reduced, or cancelled, the impact could be noticeable. The third risk is competition. Major technology companies such as Microsoft, Google, and Amazon are investing heavily in enterprise AI infrastructure. For Palantir, Maintaining clear differentiation will be critical. That means not only having strong technology, but also maintaining deep platform integration and strong customer relationships. This brings us to the key question of valuation. When we think about possible future scenarios, the range of outcomes becomes quite wide. In a bear case scenario, where AI adoption slows down and margins weaken, the company's valuation could move closer to $200 billion. In a base case scenario, where platform growth continues steadily, the valuation could remain around $300 billion. And in a bull case scenario, where Palantir becomes a dominant AI platform for governments and enterprises, a valuation of $450 billion or more could theoretically be possible. So the real question is not simply whether Palantir will continue to grow. The question is whether the company can grow fast enough to justify such a high valuation. And with that, I would love to hear your thoughts. Do you believe Palantir can become one of the most important AI platform companies in the long term? Or do you think too much of the future is already priced into the stock? Let me know your opinion in the comments. Thank you very much for watching, and I will see you in the next video.